Here, Prabhudas Lilladher and Amit Gupta of ICICI Direct join us now to talk more about how to approach the markets today. Gentlemen, morning to both of you. Ajay, I want to start off with you. You know, when we spoke with you last week as well, you had indicated that it's a good time to perhaps put some money to work. What are the sectors or stocks that you would advise one should pick up now?
Yeah, good morning. I think, after the gut-wrenching wobbliness that one saw in the market last week, I think caution, in my opinion, will be the buzzword in this entire, because all eyes will be on what happens in the meeting that the US Fed has on 4th September. And the signals coming from there will determine the course of the global markets this week. Yesterday's statement by Stanley Fischer, the US Vice Chairperson of US Fed, I think again has set the cat among the pigeons, because he said that the effects of a strong dollar and weak oil prices are seen to be diminishing and dissipating. So I think the positivity that the market was expecting from RBI governor's statement, that he sees a possibility of a rate cut, kind of a dovish stance that he has taken, I think will, in my opinion, also have to be balanced with what the US statements come from the US Fed officials. So I think I would, in this week, advise caution and look at only sectors, stocks and sectors in the large cap space. I would advise investors to look at some of the frontline names like Larsen & Toubro, HDFC Bank, Maruti Suzuki, and even sort of, on the MCV, HCV side, where we are seeing continuous strong traction, names like Tata Motors or Ashok Leyland.
Okay, well, Ajay. Ajay, you spoke about a lot of large cap names, names like L&T, Tata Motors, etc. But what about in the mid caps? Because over there as well, there are plenty of stocks, good quality names that are giving you better value. They've fallen about 10-15% in the last 1 week or so. Anything that you've identified there?
Yeah, I think one has seen a very sharp cut in some of the quality mid cap names. And if one takes a slightly medium-term perspective, then the auto ancillary space has thrown up quite good opportunities. If you look at a stock like Motherson Sumi, after scaling a high of 393 or 394, it had taken a sharp plunge, 100 rupees down, and then again it's seeing some bounce back. But there, I think, it's trading at around, say, 17.5 times FY17 earnings, with a very strong earnings growth of 38% this year and around 55-58% next financial year. That's one stock I think the medium-term investors could look at adding in their portfolio. Even stock like Bharat Forge has seen a very sharp correction from the peak. There one can look at some commitment. Also on the cement space, as the monsoon gets over and the construction activity starts picking up, I think that is one space which will start attracting investor interest. And there, I think in the mid-cap space, JK Lakshmi cement is one that we are advocating investors to look at from the medium-term perspective. And as the currency wobbliness continues, I think pharmaceuticals is one space where some of the mid-cap names like Glenmark Pharma, which Sudarshan spoke about, and Jubilant Life Sciences are the ones where we would advocate investors to take a slightly medium-term call. Also in the engineering space, Cummins, after a sharp move post-results to 1280, I think, it had come down again to 1025, the level from where it started. Albeit it's moved up now to 1100 levels. But I think if it takes a slightly long-term view, some of the names in that space, like Cummins, also can be looked at by investors.
All right. Well, gentlemen, stay on with us. We need to take a break of Prabhudas and Amit Gupta of ICICI Direct. Ajay, are the road contractors not one of your... I didn't hear any of them on your buy list. That's the one area where the government seems to be getting its act together?
Yes. I think I've been mentioning this for last now 3 to 4 months, that the total spend that the government has front-loaded, the capex that the government has front-loaded is mainly in the two sectors, roads and railways. In railways, in the first quarter, we have seen 17,500 crores of total capex, which is a 134% growth on a YOY basis, and more than 13,500 crores that the government had budgeted in the first quarter. And in roads especially, it is all the more spectacular because 48,000 crores worth of orders till July have been placed by NHAI and Ministry of Road Transport. Hence, Sadbhav Engineering and Ashoka Buildcon, the two prominent names which are pure plays in the road sector, come to mind if one is looking at investments in the medium term. And for the full year, obviously, we are expecting around 1 lakh crore worth of orders to be bid out by NHAI and Ministry of Road Transport. So that's one sector where a lot of activity is happening, and hopefully that should start reflecting in the downstream demand also with the passage of a quarter or so.
All right, well, pre-opening rates are now settling lower, so we could be headed for a rough start. A lot of heavyweights are under pressure, especially the banks. So there's ICICI Bank, Bank of Baroda, Kotak Mahindra Bank that are all in the red, and the Bank Nifty itself has started with a bit of a red tick in pre-opening. These are pre-opening rates. A lot of metal stocks too are indicating that the start could be on the downside. So Tata Steel, Vedanta, etc. not looking too good. But Ajay, from the private banks, you know, we got good corrections in names like IndusInd Bank, Kotak Mahindra Bank that all fell about 8-9% last week. Considering that there's nothing majorly wrong with the financials of these banks or with the fundamentals of these banks, do any of these portend a good buy?
I think the names that you mentioned already figure as a very large allocation in the portfolios of many institutional investors. Because the common thread, if you look at the private sector banking pack, then all the retail-focused banks, be it the banks that you mentioned, IndusInd, Kotak, or even HDFC Bank, today form a very large chunk of the portfolio for obvious reasons. You know, the provisioning levels being very low, profitability matrix look very good, but at the same time, the valuations are at a premium to the corporate-focused banks, be it Axis Bank, Yes Bank, or ICICI Bank. So I think even though these banks have corrected by 8-9%, as I said, sort of, you know, the allocations already are very high that these banks have in the portfolios. So how much more sort of, you know, can one allocate there? Whereas if the economic turn does happen in a quarter or so, then I think the corporate focused banks will at some point in time come back into play and attract larger allocations. And they also are trading at steep discount to the retail focused banks. So that is one sort of, you know, area where I would advise investors to take a slightly medium-term call. And on every dip, I think start looking at some of the corporate-focused banks, be it Axis Bank, Yes Bank, or ICICI Bank.
All right, Ajay, thank you very much for that bunch of stocks you spoke to us about. Amit, we are not done with you. We still have some of your